Good morning and welcome to Traders Next Door. I'm your host Edgar Katashabe from Forex Insights SA, and this is the latest scoop. It would look like Big Daddy Powell and the Fed have managed to do it. For months now, they've been talking about the magical soft landing into rate cuts, and it would appear that that soft landing is within sight. Now, from previous FOMC meetings, Powell had gone on the record saying that the facts, figures, and data are going to be extremely important moving forward. They were going to be looking at NFP, they were going to look at CPI, and the latest NFP results had the market a little bit worried. There was talk of a recession coming in, but it would appear that those talks were a tad bit overblown because as the CPI results came out on Wednesday at 2.9%, just shy of the expected 3%, it would look like the economy has been moving in the exact right direction that the Fed has been hoping for, and an expected rate cut is to come in September. So this is fantastic news for the US market, very decent news for the global market. So with unemployment claims coming in at 2,227 from an expected 336,000, retail sales up 1%, it would look like we are in the perfect Goldilocks zone for a rate cut in September. Now, the Fed is most likely going to look at a 1% rate cut by the end of the year. And that is the expected figure we have for now, with a maybe 0.25 base point cut coming in September 1st. Now, what this is going to mean for indices like the Dow Jones, like NASDAQ, is we're probably going to have long-term bullish continuations. When the rate cut hits initially, we might see some short-term pullbacks, but overall, this news looks like it's going to be very good for those indices in the long run. Gold, a little bit more of a mixed bag. Gold not 100% reliant on what's happening in the US economy. India being a very large country involved in gold, its GDP and all that up 8% for the year. So we're looking at a little bit more of a mixed bag with gold. Some things left to be seen, whether this will be long-term bullish or long-term bearish. Gold is a hedging commodity against the US. So typically when the US economy isn't doing well, that is when gold's time to shine comes in. But now that the US economy is doing well, there are other economies involved in gold heavily. So a little bit left to be seen what the long-term implication on gold is going to be. But this is pretty much the best case scenario that the US government has been looking for, what the US Feds have been looking for. So us as traders are going to have to pay very close attention to when the rate cuts are going to happen, how much of a rate cut are we expecting in the market, and what that is going to mean both in the short term and in the long term for our trading. But overall, this is a good result. It is what has been expected all along, and overall, this is going to be really good for the global economy. So that is the latest scoop on the facts and figures coming in. If you have any questions, go ahead and pop them in the comment section down below. Go ahead and check Forex Insights SA for any more in-depth analysis of what's going on in the trading world. I've been Edgar Katashabe. This has been Traders Next Door, and we'll see you in the next one.